Good evening, good Sunday evening to you. Welcome again to Sunday School Financial Literacy, brought to you by Hubert McIntosh, your CPA, a member of SOFA, the Society for Financial Awareness, with one mission: eradicate financial illiteracy in America, one community at a time. And I have joined with SOFA to bring that financial literacy to this community. So thank you for joining us. Well, as you know, we have been going through a theme. We have going through different programs over the past few weeks. Last week we cleared up. We spoke about Medicare. The week before we spoke about long-term care. We spoke about Social Security. So if you look at all of those, you will see what we have been doing. And, a couple of people have asked me, it seems as if the theme surrounds seniors. Why is it that it's surrounding seniors? And the answer is pretty simple. We all have seniors in our life, whether it's an aunt, whether it's a mother, whether it's a father, whether it's an uncle, and even ourselves. Some of us are seniors ourselves. And the other part, if we live long enough, we will one day become a senior. So hence the reason for a lot of these confusions that we're clearing up is the senior community is lacking in the sense in that seniors are not being educated and they're making decisions that's currently affecting them and will affect them more. So we're coming alongside hoping that we can help that situation where if in this community, if we can educate enough of you, then we will be able to bridge this gap between financial illiteracy and financial literacy. So I thank you for joining us. This is Hubert McIntosh, your CPA, member of SOFA. We're here in the studio from 9 to 10 on Sunday nights, but you have 24-hour access to us 24/7. Yes, you do. You can join us. You can visit us on the web at financialliteracy.info, financialliteracy.info. You can email us, support@financialliteracy.info, support@financialliteracy.info. You can call me directly. Yes, directly. 754-366-7311. 754-366-7311. If you don't get me immediately when you call, you leave a message and I will get back with you within 24 to 48 hours. So tonight's topic again, someone may say, well, it's all about the seniors. Well, tonight, yes, it's about the seniors. So it's for people who are already there, and it's for people who will be there, and it's for people who know someone there. So we're going to talk about reverse mortgages. Yep, I did not stutter. Reverse mortgages. So let me deal with the elephant in the room right away. A lot of people out there are going to say, oh my gosh, he's not going to talk about reverse mortgages. Reverse mortgage is a rip-off. Yes, the word rip-off. Wow. Well, I don't know how much you know about reverse mortgages, but if your knowledge about reverse mortgages is prior to 2010, then just scratch everything you know. Because if your knowledge is prior to 2010, you basically almost know nothing about reverse mortgages. Reverse mortgages came under a lot of attack because, yes, you're right. There were some scams. There were some scams in reverse mortgages, just like everything else, just like everything. There is nothing, and I repeat, there is nothing that there aren't scams. There are scams in everything. There are scams in Medicare. There are scams in long-term care. There are scams in social security. There are scams everywhere. There are scams in the world. There are scams in the United States. There are scams in Jamaica. There are scams in Nigeria. There are scams everywhere. Scams are not something new. Scams were in the beginning of time, and scams will be in the end of time. So let's not focus on scams, okay? Let's focus on education. Because if you're educated, yes, if you are educated, you will be able to identify scams, and you will be able to avoid scams. Yes. And all of that comes with education. You have heard me use the word previously, and it wasn't scams, but confusion. Most financial topics are confusing. Yes, most financial topics are confusing, and the only way to minimize or avoid confusion is with education. So that's the goal. That's the goal we have for this show, Financial Literacy, that comes every Sunday night, 9 to 10 on Waves 1170 with Hubert McIntosh, your CPA and a member of SOFA. Okay, so let's go into reverse mortgages. Let's talk about an overview. I already told you that if anything you knew about reverse mortgage was prior to 2010, then you can forget it because you almost know nothing. And why? Why is that? What happened in 2010? Well, in 2010, the government identified that the scams were getting out of hand. So then regulation came in, and reverse mortgages are now managed under the oversight of HUD. That's the Housing and Urban Development. And if you still maintain to say, well, oh, it's Housing and Urban Development, they're still scams. Well, in that way, then you'll just have to say, well, anything that the U.S. government is in a scam, and then what are you going to do? Are you going to just put your head in the sand and just says, oh no, what am I going to do? No, there are regulations, there are guidance, and will there be misappropriations? Yes, that's going to happen. But with the education, we're going to be able to minimize. Yes, we're going to be able to minimize and avoid it. Sometimes we may not achieve it 100%, but the more education we have, we can identify it. So let's talk about the overview. The things we're going to talk about tonight. We're going to talk about qualifications for a reverse mortgage. Yeah, we're going to talk about benefits of a reverse mortgage. We're going to talk about loan cost. Yes, it's a loan. A mortgage is a loan. We're going to talk about common uses of proceeds. That's the loan proceeds, the money that we get from the reverse mortgage. We're going to talk about the common uses. We're going to talk about payment options. When we take this mortgage, how do we pay it back? What are our options in paying it back? We're going to talk about reverse mortgage products. Yeah, there are different types. So it's very important that I educate you on that and let you be aware of the different types so that when you encounter them, you know exactly how to deal with it. We're going to talk about steps to getting a reverse mortgages. Yeah, there are steps and the procedures, and we're going to talk about some of those stuff. All right? So we're going to dive in. So, what would you say the main purpose of reverse mortgages? All right. Reverse mortgages are a way for homeowners 62 years old and over to access, equity they have in their homes. So let's break down that sentence. Let's break down that sentence. First of all, it's for homeowners. If you're not a homeowner, then we're not necessarily talking to you, but you can still listen because you may know someone who is a homeowner. So the first qualification is it has to be a homeowner. The primary borrower has to be over 62. Yes, over 62. And you may hear me say, you say the primary borrower has to be over 62. Yeah. In other words, then, if there's a married couple and one is 62 and the other is 58, that 62-year-old is the primary borrower. Yes, so that's how that works. So when you hear me say, well, it's for people who are 62 and older, it does not necessarily mean that both parties have to be 62. As long as one of them, as long as they're on the mortgage, they have to be on the mortgage. If the one of them are on the deed, rather, they have to be on the deed of the property. If one of them is over 62, then they're going to be eligible for the reverse mortgage. And the next part, the purpose is to access equity. Equity they have in their homes. So let's clear that up, because that in itself sometimes is confusing. Someone goes and says, well, oh, I'm going to be able to get a reverse mortgage. No. Let's wait a minute. You have to have equity. You're not going to get a reverse mortgage if you don't have equity. Okay? So we're going to clear that up. So get your pen, get your paper, make those notes. Homeowner, 62 years and older, 62 plus, equity in the home. So those are the first three criteria. Okay? All right. A reverse mortgage is a loan against your home that you do not have to pay back for as long as you live in the home. Yes, that worth repeating, because this is one of the confusing things. And I'll repeat it. A reverse mortgage is a loan against your home that you do not have to pay back for as long as you live in that home. Yes, don't have to pay back. And we're going to clear up some of that confusion, because I know you're thinking, wow, what do you mean I don't have to pay it back? Yes, you don't have to pay it back as long as, don't forget the condition, as long as you live in the home. So don't think, well, I'm just going to move and just leave. No, as long as you live in the home. Okay? You get that? We're moving along. You still own your home throughout the entire term of the loan. And this is part of the confusion why people sometimes are scared of reverse mortgages, because they said, because they heard their neighbor, they heard Sally, they heard Susie, they heard John saying, oh, when these people give you a reverse mortgage, they take your home. Folks, that is the furthest thing from the truth. If you heard that, that's an old wives' tale, or that's a myth, or whatever you want to call one of those superstitious things. That's what it is. You own your home. Yes, you still own the home. Nobody owns your home. It's a loan against your home. You still own your home. And I'm driving this home because people, no pun intended, because people are telling lies. People are misguiding people and telling people that when you get a reverse mortgage, you lose your home, you give away your home. Folks, that is not true. Not true. Absolutely not true. It's a bare-faced lie. It's a downright lie. Okay? I think I've beaten that one enough to death. All right. A reverse mortgage. Now, here's how powerful this thing is. A reverse mortgage can help you access cash based on the value of your home. Remember, we talk about the equity. The equity is going to be measured by the value of your home less the amount you owe. That's what the equity is. So let me clear up that definition right now before we even go further. Equity is the value of the home. Yes, the value. Whether you said it's appraised value, whether it's the values by the county or whatever, but it's the value of the home less the amount you owe. If you have a mortgage on the home, it's less the amount you owe. And that is how you determine your equity. Okay? So I think we have cleared that part up. So what we're saying then, you can access cash based on the value of your home without, folks, don't miss this, please, without you having to make a monthly mortgage payment. I did not stutter. You can get money. Yes, you can get money and you don't have to pay a monthly amount. Contrary to forward mortgage. Just in case you never heard the term before, it's because they took off the word. You heard about mortgage. But basically, the mortgages that you have heard and are familiar with, it's called a forward mortgage. Because what it means that going forward, you will be paying a monthly payment going forward. So basically, if you close on the property, like today, oh my gosh, I neglected it to say it. I apologize to the fathers. Oh my gosh, today is Father's Day, June 22nd, 2017. I want to wish all the fathers a happy Father's Day. I hope you're having a great day. I hope that your loved ones have celebrated you, are currently celebrating you, and have acknowledged you. Okay? And for those of you fathers, for whatever reason you were not acknowledged, I am acknowledging you tonight. The show, the members of our staff, we are acknowledging you tonight, and we are wishing you a happy Father's Day. Okay? All right. So where were we? We were talking about forward mortgage. So what am I saying with forward? With today being June 22nd, if you took out the mortgage today, if you close on the mortgage today, you're going to be making payments forward. So your first payment may be sometime in July, first payment may be sometime in August, but it's forward. So that is what's called a forward mortgage. That means you get some money, or you get the credit, and you are paying it back going forward. The reverse mortgage is the opposite. It's like the reverse. It's like reverse. So we could say backward, which is the opposite of forward, or we can say reverse in the sense that you get the money and instead of you're paying it forward, it's being calculated backwards to be paid sometime in the future. Okay? All right. What can this really do? This can help you better manage your financial future. And let's talk about that for a minute. Better manage your financial future. Remember what our focus is. We're providing financial literacy so that you're educated enough so that you don't run out of money. Remember the statistics I shared with you that by 2050, there will be 4 million centenarians. Yes, 4 million centenarians. And statistics are saying that's the good part. 4 million, because medical science has gotten so good now that people are living longer. But there's a scary part to it. Yep, there's a scary part. The people, 99% of those 4 million people will have run out of money. They basically will be broke. They will have no money. So what we're hoping is that we are giving you enough education so that you can make preparation so you don't run out of money. And one of those solutions for not running out of money is a reverse mortgage. Okay? All right. So, how do you qualify? Okay. Before you get scared, there is no credit verification. Yes, I said it. No credit verification. Or minimal credit verification. But it's not like a forward mortgage where they take your arm and your leg and your firstborn child and stuff like that. No, there might be minimal credit verification, but nothing to really say, well, this gonna disqualify you. You know, they may verify that, yes, you exist and you are not just a figment of someone's imagination and you're not dead and that your information is on public record. So those are some of the things regarding the credit. There are no income requirements. Yes, no income requirements. Wow. Do you know the mortgage crash or real estate crash? What do you call it? Real estate crash, mortgage crash we had in 2007, 2008, and we're still feeling some of the effects of it. One of the number one problem back then, what was happening is that there was a type of mortgage that came out which really helped to push us into that. There were other factors. So don't take it that I am saying there is one reason. No, there are other factors. But one of the factors for that crash was they had this loan came out. It called a Nina loan. You know, like you heard about El Nina, the weather depression or whatever there. El Nina, you heard about El Nina, Los Nina, what happened? Nina, Nina. There was a loan that came out called a Nina loan. That Nina meant no income, no asset verification. So what was happening that people would just say an income and they would just say the assets that they have. And the banks would give them a loan based on that. They did not verify the income. They did not validate or verify the assets. That was back 2006, 2007, 2005, back then. But let me tell you now, right now, there's no such thing. You are not going to get any NINA loan. You're not going to get any NINA loan. Let me correct myself. Yes, there's one type of NINA loan. One type of NINA. But it's not NINA. It's NI. Na is there. So it's not NINA. It's NI. Because I said to you, there's no income. You don't have to have any income to get a reverse mortgage. But why it can be NINA? Because you have to have an asset. So you have to have an asset. You're not gonna get a reverse mortgage unless you have a home and your name has to be on title. So don't think, and I'm just telling you so you can evaluate the qualifications now. Don't think you can get any loan if the house is not in your name. You're not gonna be able to say, oh, it was my aunt house, my uncle, my dad. No, none of that is gonna work. Your name has to be on title. Yes, your name has to be on title. Okay? All right. So no income. Here's another one. No health requirements. Ooh. They don't care whether you're healthy or not. Remember now, these are the different vehicles we're talking about. Remember a few weeks back, we spoke about life insurance. Oh, you're not going to get life insurance if the health is a problem. But in this particular case with a reverse mortgage, there are no health requirements. Okay? All right, great. Going further into qualification. So how is the reverse mortgage? So here's the part that you guys been waiting on. So how is it determine the amount of the reverse mortgage benefit? How is it determined? All right. Okay. So here we go. It's determined the age of the youngest borrower on title. All borrowers must be at least 62 years of age. Remember now. So you can have, we talk about the couple. Remember, we used the example with the 62-year-old and we used the 58-year-old. Well, if it's a 62-year-old and a 58-year-old, the 58-year-old is not on is not on the loan because the qualification is that the person must be 62 years or older. But let's reverse that now and says you have two people. One is 62 and one is 66. All right. So so that's the younger one. The 62-year-old is the younger one. And in some case, it can even be three people. It can be three people over 62. So it's either the younger one or the youngest one that will be the youngest borrower on title. All borrowers must be at least 62 years of age. All borrowers. But the age of the youngest borrower, that's how it's being calculated. The age of the youngest borrower untitled, that's one part of the formula. The second part of the formula is the current appraised value of the home. Remember, I told you how the equity is determined. You have the appraised value of the home less the amounts owed on the home, and that will be your equity. All right. But we're telling you the formula now, how it's calculated. The age of the youngest borrower, the current appraised value of the home, and the current interest rate. Those are the qualification. Age, appraised value, current interest rate. This is how it is the benefits are it's calculated. Okay, the qualification for that, for getting approval. All right. So what are the benefits? What are the benefits? Some of the benefits I already mentioned. no monthly mortgage payments, no income qualification. So I hope you guys are got your paper and your pen are taking your notes, because this is Hubert McIntosh, your CPA, a member of SOFA. SOFA, the Society for Financial Awareness, with one goal, one mission to help eradicate financial illiteracy in America, one community at a time. And I have joined with SOFA to bring that financial literacy to this community, so that this community will not fall into that FINRA study. 2 years ago, FINRA did a study that Americans, 74% of Americans were financially illiterate. Well, if they do that survey in this community, we are going to prove them wrong, because we're going to show that we are better than the national average of 74%. Okay? So remember, we're on Sundays 9 to 10 on WVS 1170. There's an app. You can find us on the internet, WVS1170.com. There's an app on this app store, whether it's an Android or an iPhone. In the Play Store or the App Store, you can find WVS 1170. You can go to financialliteracy.info, financialliteracy.info, and there's a link also that will take you to the app. So you see, we have made it so easy for you to find us, and we're on every Sunday nights 9 to 10. But you have 24/7 access to us, because we have a website, financialliteracy.info. We have told you about it, financialliteracy.info. You can email us, support@financialliteracy.info, support@financialliteracy.info. You can also call us directly, 754-366 7311, 754-366-7311. Okay? All right. Let's go back into the benefits. No monthly mortgage payments. No income qualifications. Oh, here's a juicy one. Loan proceeds may be tax-free. Yes. You can get this money and it's not income. And when it's not income, you don't pay tax on it. Okay? All right. You can receive money in a way that suits your financial situation. Yeah. Different people have different situation. You can get the money in a lump sum. You can get it with a line of credit. You can even get it with fixed monthly payments, where they will give you this money. You know, like for instance, with a forward mortgage, where you are making the monthly payments. With a reverse mortgage, it can be set up that they are giving you monthly payments. Yes, you can be receiving this money monthly, and you are not paying any tax on it. How juicy is this? Okay? Or you can get a combination of any of these options, whether lump sum, line of credit, fixed monthly payments. Here's another one, seniors. And for those of us who are getting ready to be seniors, oh my gosh, please don't miss this one. The money that you get will not affect your Social Security or your Medicare benefits. Whoa. Guys, do you know how powerful that is, where you're getting this money and it's not affecting your Social Security or your Medicare benefits? Let me explain that. I'm going to just explain that briefly. With Social Security, remember this reverse mortgage, you can start taking it at 62. Remember, we spoke to you about Social Security. Social Security full retirement age for some people right now is 66 and some is 67. but you're eligible to take it at 62, even though the full retirement age is at 66 or 67. But here's what this is talking about. Based on your income at age 62, if you decide you're going to take Social Security, based on your income, the Social Security can hold back a portion of your Social Security payment until you get to full retirement age. Yes, but with reverse mortgage, the money that you get is not calculated in that. So you're getting income. You're getting income from your home and you're getting it tax-free, and it's not affecting your Social Security benefits, and it's also not affecting your Social Security taxes. Do you forget that I told you that there are instances if your income is if you're working while taking Social Security, there's a possibility that some of your Social Security will be taxable? Please don't forget that. So with all of this, before we even go further, do you see why financial literacy is so important? Because without financial literacy, tell me, how would you be navigating through this? These are rough, murky waters to navigate through without guidance. If you don't have guidance, oh my gosh, you're gonna be in this water, and you may head to the part that you think is water, but it's quicksand. Yeah, it's quicksand where you get into it, and all that happens is that you just keep going down. You keep going down. Well, we don't want that for you. That's why we have created this program. But you have to reach out to us. And we come on Sunday nights and we are explaining this. But in 1 hour, we can only share so much. Because look at it. The program is already past the half an hour. And the information I want to share with you, I'm not even halfway there yet. So that is what's happening. In the 1 hour, we can only share so much. And that's why I welcome you to visit us on the website, financialliteracy.info, financialliteracy.info, or you email us, support@financialliteracy.info, support@financialliteracy.info, or you call us directly, 754-366-7311, 754-366-7311. Let us help you on your financial journey. Okay? All right. Let's move along. There's still more benefits. I'm not finished with benefit. The loan. Remember now, it's a loan you're getting. You're getting a mortgage. It's a reverse mortgage. Here's another juicy detail, and there's some confusion out there with this also. So be careful who you're listening to, because people are talking things that they're factually not true, and in some cases they're factually lies. And you may say to me, oh my gosh, Hubert, you said not true and you say lies. Yeah, I didn't stutter. Not true doesn't necessarily mean it's a lie. Let me clarify that. Someone can tell you something which is not true, but they themselves don't even know that it's not true. If that person doesn't know, they didn't tell you a lie. The lie is when a person blatantly, they know something to be different, but they tell you otherwise. That is a lie. So remember one of the saying I introduced you guys to before, where it says, if what you thought to be true turn out not to be true, when would you want to know? Let me repeat that. If what you thought to be true turned out not to be true, when would you want to know? Well, I'm hoping that you're saying you would want to know it now. So that's why we're doing this Sunday school. All right? So the loan is not due until the last borrower leaves the home. Let me explain this, how powerful this is. Because you may you hear the statement and it may not register, but I'm going to break it down. The loan is not due until the last borrower permanently leaves the home. Okay, here's a situation. Let's go back. You have 3 people. 62, 66, 67. Well, you know, it could be siblings. It could be siblings. It could be spouse and sister-in-law or brother-in-law. You know, the relationship is not what matters here. We're talking about 3 people over 60, 62, 66, and 67. And they enter into a reverse mortgage. Do you know the loan is not due until that third one leaves the home? Or, okay, let's be real. Or until that third one die. So let's follow with me. Tracking now. Remember I said to you, there's 67, 66, 62. Do you realize that these 3 people, based on what I've been sharing with you, and especially what's going to happen in 2050, where we're going to have 4 million centenarians? So let's ask yourself, 2050 from now, let's do some math. 2050 from now, we're now at 2017, right? 2050 from now is 33 years, all right? So let's use these 3 people. So the 62-year-old will be 95. The 66-year-old will be 99, and the 67-year-old would just have turned 100. Do you see what's happening? This loan is still not due because only one of them is now at 100, and they're all still alive. So I just hope you got that. And if you don't, you reach out to me and I will explain it more. All right. Here's the next one. And this is one of the most common one that people, oh my gosh, there's so much confusion. There's so much confusion. I thank you for the opportunity that I can share some of these wisdom with you so that you can get educated and not fall for the myth and the false information that's circling. All right, listen to this one. Neither you nor your heirs will owe more than your home's appraised market value at the time repayment is due. Neither you nor your heirs will owe more than your home appraised market value at the time repayment is due. Okay, it says at the time repayment is due. So let's talk about repayment is due. Repayment is due one of 2 ways, right? Remember I said to you, the loan is not due until you're leaving the home. So say a senior that took out the reverse mortgage and 20, 30 years after, they decide to leave that home, whether intentionally or unintentionally, or voluntarily or involuntarily. Once they're leaving that home, the mortgage is now due. So they could be leaving by sickness, they could be leaving by death, but whenever they are leaving that home, the mortgage is due. So here's what this is saying, where the confusing part. you will not owe more than the home appraised value. So here's an example. Suppose for whatever reason it's now that you owe 105,000. 105,000, right? You're leaving the home. But the value of the home is 100,000. The value of the home is 100,000, but you owe 105. You don't owe any more. But you're not going to get the home, you're leaving. And this is sort of the confusion where people say, oh, they took Miss Mary home. They took Sally's home. No, nobody took Sally's home. Sally owed $105,000. The house was appraised at $100,000. So how can you expect Sally to get any money? She owes more than the house is appraised. So the question is, you ask yourself, the bigger question or the different question you should ask yourself, why did Sally leave when Sally could have stayed in that home until she dies? Sally could have stayed in that home until she dies and don't owe any more money. So why would she leave to go someplace to incur expense? So you see what I'm saying, where it's necessary that you have a planner where someone will guide you, because sometimes we make emotional decisions and we don't factor the financial aspect of it. Because here it is. If this lady had gotten proper direction, knowing that, Sally, you can live in this home for as long as you live and you don't have to pay another dollar. Basically, Sally is living free. But because someone lives in North Florida and they want Sally to move from South Florida to come to North Florida, didn't do the math, just saying, well, Sally will be near them. Yeah, but look at what you just cost Sally. And these are the reasons. These are the reasons I'm telling you that it's necessary. It's necessary for you to seek professional guidance. Okay. All right. So we have gone through. We have talked about the benefits. We have spoken about the benefits. We have spoken about the qualifications. We have spoken about what a reverse mortgage is. All right. What are some of the uses? The common uses of the proceeds of the loan? Many. There are many. I'm just going to read from a list. There are so many. Paying for daily expenses. That's one. Making home repairs and improvements. Covering medical expenses. Purchasing long-term care insurance. Establishing trust. Helping to financially support family members. Grandchildren tuition, helping different ways, paying off loans or bills, maintaining or improving quality of life. Let me talk about that for a minute. You want me to share with you one of the saddest thing I see going on right now. Right now. Won't call any names, but I'm experiencing some of this. These are people I know, basically. Remember, I'm telling you, as a CPA, I get different people come into the office. One of the saddest thing going on right now, and I believe I'm going to use a term that is because of a lack of knowledge. Do you know you have people that owes no money on their home? No money. The home is free and clear. Yes, I didn't stutter. The home is free and clear. In some cases, the home may value 200,000, 300,000, 400,000. Folks, these are facts I'm telling you. The people don't owe any money. $200,000, $300,000, $400,000 home. They don't owe any money. No money. They owe no money on the home. So you're saying to me, so Hubert, what are you saying? What's sad about that? The fact that they don't owe any money, that's not the sad part. The sad part is how they are living. You have people with homes that are $400,000 free and clear, and the people are basically living in poverty. You explain that to me. You explain that to me. Explain it to me. Call me. Let me know. Because I would like to know the financial sense. You notice now, I am not stepping on any toes. The question I'm asking is the financial sense. Let me know why that makes sense financially. Here it is. You have a home, $400,000 equity home, and you're living like a pauper. You're not eating good. You're struggling. You're past 62 years old and you're struggling in life. You're struggling in life. Sometimes the light bill is not even paid on time. The cable is cut off for whatever reason. And this person has a $400,000 home. Help me. Help me. I need your help in understanding this. So this is what I say is maintaining or improving quality of life. That person is not living any quality of life. Not living any quality of life. And different people will have different reasons. You can ask the people you know, because you know some of them. Some of them will tell you, well, I'm going to leave it for my children. Yeah, that is nice. It's a nice thing to say, but you're living a poor quality of life. But you're going to leave it for your children, or you're going to leave it for somebody while you are living a poor quality of life. You're not even eating well. You're not dressing well. You're not taking care of yourself. You're not getting proper medical care. When there are vehicles out there like reverse mortgage that can help you to have a better quality of life. Wow. I didn't mean to meddle, but I'm just telling you what's going on. So another thing, people are using this. Buying a new car. Wow, you've worked all your life. You now have a home that's free and clear. But yet still, you're driving a car that sometimes you're not even sure if it's going to take you home. It's a question again. Where's the financial sense there? Why are you driving a car? Which is more valuable? You or the home? So here it is. You have this home free and clear, but you're driving a car that you're not sure will take you home. Why don't you buy another car? Vacation. I see so many people. I see people where it says, I was speaking to someone today. It says, you know what? My parents, they don't even take vacations. I can understand where someone may not be able to afford it to take a vacation. But here's the example I'm using. Remember, I just told you that this person has a home free and clear of $400,000. Wow. So the time is up on us. The time is going fast. So I'm going to try to speed up and give you some other little things to think about. But as you can see, this is not a topic that can just be fully addressed. It cannot be just fully addressed in 1 hour. I'm just bringing it to your attention, letting you know that there are options. You have options. You actually have options. You don't have to just go through what you're going through and living with poor quality. You have options. Okay? Let me just quickly run through some other stuff. lump sum. I already mentioned to you that, benefit payment options. You have different benefit payment. I've mentioned that you could get lump sum, you could get a withdrawal available at low. You can get a partial amount, you can get a fixed amount. You can get the money different ways. You can get a line of credit. Yes. You can get a line of credit. Let me just take a minute to explain that. All right, here's an example. So let's go back. Let's go back to that person. Let's using that as our model. That person who has that $400,000 home, right? And the home is fully paid off. I think the math right now, it's somewhere about, based on the age, I think the line of credit is somewhere about 55%. It's a ballpark, about 55% of the loan, of the value of the home. So a person who has a home with a $400,000 equity can get a line of credit of approximately $210,000. Keep in mind what I just said. A line of credit. I did not say they are using the money. Follow me here. Oh my gosh, I wish I had more time. Follow me here, what I'm saying. It's a line of credit. So here's this person as a line of credit of $210,000. They have access to cash if they need it. That's the power of this. So, all right, let's deal with one of the challenges and one of the objections I'm going to get out there. I'm going to deal with it right now, in the sense that you're saying to me, well, that same person could go to the bank. They have the house free and clear, $400,000. They can go to the bank and they can get a line of credit. Really? Really? You think it's that easy? I just told you that to get a reverse mortgage, there's no income. You don't have to have any income. There is no bank. If one of you know a bank that will give you a loan without an income, please call me, because I would be able to give this bank many clients. You cannot get a loan from a bank without income. Okay, well, the clock on the wall is telling me, I gotta get out of here. So I hope you have gathered some stuff. From this tonight. And wow. So remember, you can contact us on the web, financialliteracy.info. You can email us, support@financialliteracy.info. You can call us 754-366-7311, 754-366-7311. This is Hubert McIntosh, your CPA, a member of SOFA, the Society for Financial Awareness, bringing you, helping to eradicate financial literacy in America, one community at a time. And I have joined SOFA to bring it to this community. I want to thank you for joining us. Have a good evening, and I will see you next week. Next week, we'll be talking about refinancing. Yes, refinancing. I want to remind you of that, refinancing. So stay tuned. Take care. Have a good evening, and I will see you next week.